everyone. Welcome. Good afternoon. You're watching Closing Trades on ET Now. I am Snehi Shah, and well, the last 1.5 hours of the last trading session of calendar year 2025. No complaints at all on how the day has performed today. It's been an excellent day of trade for us. Something that we haven't seen in a very long time, to be quite honest, for our markets. Nifty 50 up almost 1% and now over that 26,150 mark. Let's see if in the next hour and a half we're able to scale to that 26,200 mark too. Clearly, the New Year cheer has reached the market as well. It's JSW Steel, Tata Steel. So the steel counters are the top gainers from the Nifty 50 group of stocks, and otherwise too on the back of the announcement of the imposition of safeguard duty on some of the steel categories. So it's JSW Steel, Tata Steel that's up between 3 and 4.5%. You have SBI Life, Reliance, Shriram Finance, ONGC, Kotak Mahindra Bank that are doing very well. In fact, it's a 2.25% uptick on Reliance, and that is helping keep the positivity quite solid in the market. On the flip side, only a handful of Nifty 50 losers today, and most of them belonging to the IT pack. Some weakness being seen over there. It's TCS, Wipro, Tech Mahindra, Infosys. These are the four names that are the top Nifty losers, along with the Bajaj Finance and Sun Pharma from the other sectors. But mostly the negativity is seen in the IT space right now. Eyeing the advance decline ratio right now, quite positively skewed in the favor of the advances, and that ratio is quite heavy in the favor of the advances, which is why the market breadth is also quite cheerful. Now, in the first half of the trading day, you did have the Nifty mid cap and the small cap indexes that were outperforming the overall Nifty 50 benchmark and the Nifty bank. Let's see what's happening right now, and that continues to be the trend because the day's highest point for Nifty mid cap and small cap as well, a slightly more than 1% uptick coming in on both of these indexes, and it's the broader end of the market that's looking very cheerful. Before we talk about some select stocks that are doing well sectorally, once again the exuberance continues in metal names led by this duty that we're talking about, the safeguard duty on steel stocks. Followed by that, you have energy, PSU banks, realty, banks, FMCG, auto and pharma that are all doing well. In fact, pharma is the least sectoral gainer, but even that index is higher by 0.8%. So that indicates the kind of strength that we're seeing in the market right now. On the flip side, absolutely flat moves on Nifty IT. That's the only pocket of weakness that we're seeing, but can't really call it weakness because it's just a very flat move coming in on Nifty IT, about 0.1% lower. But let's talk about some individual gainers and losers from the broader end of the market. It's MRPL that's up 11%. Graphite and HEG, both of them are doing very well on the back of some news flow that we're expecting to hear from the European Union carbon border adjustment mechanism. That's working in the favor of both of these stocks, and they're seeing very good move. The entire fertilizer and chemical pack that was largely under pressure yesterday has found back its momentum. Once again, you have names like PCBL, you have Deepak Fertilizers, all of these stocks that are doing very well, including a Coromandel as well. Lastly, what is under pressure right now is names like Radico Khaitan. You have Hindustan Copper that's seen a little bit of a pullback after the kind of record rally that we've seen on the stock, with names like Aditya Birla Sun Life, Honasa Consumer, PB Fintech and JBM Auto joining that list. But let's take it across to my colleague Ravinder, who's waiting by with a list of all the stocks that are above today on the back of their individual news flows. Ravinder, where are we seeing action in the market today?
Well, as a previous specialty is under pressure on the back of the promoter stake sale, where company's promoter entity Vivera Investment and Trading will sell 6.32% stake of the company at 2,835 per share to 2,850 per share, and the deal value is approximately 700 crore. So back of this deal, previous specialty is under pressure, and the stock is down more than 12 to 13%. Apollo Microsystem is buzzing on the back of the order win, where company's arm Ideal Explosive has bagged order worth of rupees 419.4 crore for the supply of bulk explosives, and apart from this, company has also bagged order of rupees 1.5 crore for the supply of cartridge explosive, and with this the total order of the total order stands at 421 crore. Rights is also in focus on the back of their order win, when company has received a work order of $3.6 million from the Zimbabwe. So back of this, rights is also in focus. Hindustan Zinc is under pressure on the back of the action in the commodity market, where silver is down 5%, is trading at $72 per ounce, and silver is down more than 13% from the record high. So back of this selling in the silver, Hindustan Zinc is also under pressure. Shakti Pump is in focus on the back of their order win, where company has received new work order from the Madhya Pradesh Urja Vikas Nigam Limited for 4,840 stand-alone off-grid DC solar photovoltaic water pumping systems, and the order of the size of the order is 170 crores. So back of this order win, Shakti Pump is in focus, and the stock is up more than 3 to 4%. Workout is also in buzzing, where European Medical Agency had grant accelerated assessment to WCK 5222, and the accelerated assessment designation reflect AMA's view that WCK has the potential to address the unmet medical need by providing an effective therapeutic option for the treatment of following serious and life-threatening injection, particularly those caused by the multi-drug resistance and XDR gram-negative pathogens. So back of this workout is also in focus, and the stock is up more than 4 to 5%. And if, lastly, we talk about some of the stock that is in action on the back of the positive brokerage note. First is MCX, where Morgan Stanley has come out with a note on the MCX, and they have upgraded the stock to equal bid from the underweight rating and hiked target price to rupees 11,135 as compared to earlier target price rupees 6,710. They say that the average daily transaction revenue has surged over the past 3 months and shown no signs of ebbing. And lastly, Zydus Wellness is also in focus on the back of the positive brokerage note from the Motilal Oswal, where Motilal Oswal has initiated coverage with the buy rating and target price rupees 575. They say that the portfolio well aligned with the structural shift in global food and nutrition consumption trend of the company, and they expect margin will expand 15 to 16% and estimate approximately 30% revenue CAGR and approximately 35% EBITDA CAGR during FY25 to 28. So back of this, Zydus Wellness is in action, and the stock is up more than 8 to 9%.
Okay, Ravinder, thanks so much for taking us through that. Yes, lots of buzzers in the market, and that is indicating the strength that we're seeing. Let's take the conversation ahead with Kunal Bothra, who's joined us to make sense of the kind of moves that we're seeing on the markets. And Kunal, it's almost time to ring in the New Year cheer, but it seems like the markets are already getting a whirlwind of that and the kind of positivity that we're seeing on the Nifty today. Are we looking at a happy New Year for the Nifty?
As they say, all's well that ends well, and hopefully, I think this tumultuous year, I think that's the best word to try and summarize this kind of a calendar year. It's good to see that the Nifty is trying to claw back again above the 26,000 mark. It's been a good recovery day for the index, and particularly the strength coming back into the bank index, follow through action for many sectors like metals, etc. Recovery across the PSU stocks. So I think it's been a spectacular day as such when you look at this in the context of what was handed over to us over the last 2 or 3 months of the market volatility. The Nifty holding on to the 26,000 mark, I think, is a strong signal that we could be looking at maybe further gains starting off this calendar year 2026. So now the expectation is that the Nifty would not just try and come back to the previous breakout point of the swing resistance, that's 26,250 levels on the spot basis. But this time around, I would expect the Nifty to head a little bit more higher on the short-term basis, expecting the Nifty to head towards 26,400 to 26,500 mark on the spot levels.
So that's on the benchmark indexes. But Kunal, what about the trend that we're seeing in the broader market? Once again, that renewal of hope in the Nifty mid-cap and the small-cap space. What are you making of the moves over here?
See, I think it's a good sign that the small caps and mid caps would start to get into a revival pretty soon. The best part to try and look out for is if these moves are backed by volumes, because I think that's the bigger concern. Had it not been the comeback in terms of volumes, then we would probably have doubted that maybe there's mid caps and small caps, or the bounce back would take some bit of more time. But the fact is that many of the stocks are seeing a follow through up move. These stocks are seeing some good volume patterns. There are many of the names like NCC, for example, HFCL, the stocks which have been buzzing today. Look at the divergence these stocks have from their respective 200 moving averages. There was a point saying that almost 20 to 25% of a divergence was there for these stocks from their respective 200 moving averages. Now, those are very steep kind of aberrations which generally don't last for too long. My sense is that the markets are now getting into that underperforming, the recovery for the underperformers, and that's where I would believe that small caps and mid caps will have a spade over the next 1 or 2 months where they would start to go into a spring of outperformance. So I would be bullish on mid caps and small caps selectively. You have to try and pick and choose what kind of trades you are looking out for, specifically the ones which are high beta stocks and ones which are looking for mean reversions, or if someone is looking to ride the stronger names and the ones which are leaders in the entire pack.
Thanks for that view, but shifting focus to an ET now, breaking right now, we understand from sources that Vodafone Idea is going to be in focus. The cabinet has approved the package to freeze AGR dues worth 87,695 crores. Prakash has all the details. Prakash. Okay, I believe we've snapped that line.
Well, that's
okay,
an important
Prakash, go ahead.
development coming in and a big relief for Vodafone Idea. Well, that's an important development coming in and a big relief for Vodafone Idea. As sources are confirming that the Union Cabinet in its meeting held today has confirmed a relief package for Vodafone Idea. A very significant development coming in following Supreme Court orders, where the Supreme Court has given go-ahead for the government to take a call on Vodafone Idea as it comes under policy framework and can decide any sort of relief measures. Following that order, government, in fact, the Telecom Ministry had prepared a proposal after inter-ministerial consultation that was sent to the Union Cabinet for its final approval. And it's today's meeting, Union Cabinet has approved a relief package for Vodafone Idea revival. A very significant development coming in. As per the information we are getting it from our sources, that the Vodafone Idea package, under this package, the government is likely to provide a relief on penalty and interest amount on AGR dues. That could be provided. In fact, it has freeze AGR dues at rupees 87,695 crore, which has to be paid from financial year 2032 to 41. Of course, this is going to be major relief for Vodafone Idea, which is reeling under financial pressure. Trying to get trying to take several steps to revive the company, and of course, AGR dues and relaxation on that is one of them. And of course, government has given relief today, and that it is likely to provide major relief to Vodafone Idea. Around 3 p.m., the government is likely to hold a formal press conference. Likely to announce these measures through a formal press conference. We're expecting what could be the contours that the government has taken. The details are awaited, but what sources are confirming at this point of time that the relief package has been accepted by the Union Cabinet. Back to you.
Okay, Prakash, sorry, quick follow-up. With regard to what this means for Vodafone Idea. By freezing of AGR dues, my understanding is that there will be no additional interest or penalty on this amount of 87,000 crore. Am I right in understanding that?
Yeah, of course. The relaxation has been given in terms of freezing of dues and providing relief on interest amount and penalty on the accumulated AGR dues. So they'll not have to pay extra amount on this amount, and that has to be paid from financial year 2032 to 41. So the extended period has been granted, and the amount has been freezed. So Vodafone Idea will get extra time. There'll be no extra penalty and interest amount on the over the AGR dues. Of course, company will get significant relief after such announcement. We are awaiting more information on that. We are expecting...
Okay, all right. Thank you so much for that, Prakash. Of course, the understanding being that you have 88,000 crore circa being frozen, no interest, no penalty, Snehi, on top of this. And the timeline for this pushed to FY32, which is another 6 years from now, which allows the balance sheet of the company to somewhere recover. We also have Mr. H.P. Ranina, who's the Supreme Court lawyer, on the phone line with us. Mr. Ranina, this is significant. We also have Sudeep Bandyopadhyay, market expert. But Mr. Ranina, let me come to you. This is significant. This is a large development. In your opinion, what does it mean and how large?
Well, thank you for having me, first of all.
Sir, completely our pleasure. Thank you.
Yeah. I think it is a lifeline which the government has thrown to Vodafone. And this is excellent news because it will give Vodafone a lot of breathing time, and apart from that, reduce its liabilities by way of interest and penalties. So I don't think the Vodafone could have got a better New Year's gift than it was got today. And certainly this company will now be able to come back on its feet. Government, I think, wanted to ensure that there is no monopoly of two people, two telecom operators. Therefore, they wanted a third one in order to ensure proper competition. So this is a government step. And government, as you know, owns almost 49% of the shareholding of Vodafone Idea. So again, the government has played its due role. Supreme Court gave a free hand to the central government, saying that you do what you like. So I don't see any legal hurdles a year after, because Supreme Court has given a clean chit to the government of India. Government has now acted in the best interest of the telecom ecosystem. And because of that, I think this will be widely accepted, and I don't see any legal hurdles at all. So this will go through, and I think it's wonderful news for the telecom sector.
Positive there, Mr. Ranina. But Sudeep, help us understand the stock move that we're seeing, the sharp drop in the stock. Initially, when we heard about this, there was a 6% uptick, and now we're all the way down to 7% on the stock. Help us understand if there is any finer print here or reading between the lines that we're missing.
Well, I think we have to wait for the press conference or the announcement, formal announcement. But on the face of it, this looks to be a very good development from the Vodafone Idea point of view. This relief and freezing the amount is a big relief, and also giving this 5-6 years breather where they don't have to pay anything on this account. So the payment starts from 32 and continues till 41. So I think it's a very, very positive development from a Vodafone balance sheet point of view, and the financial stress to a great extent gets reduced, undoubtedly. Of course, Vodafone has an operational challenge as well. Customers continuously, and I think that needs to be plugged sooner the better. And I'm sure Vodafone will be able to focus on the operational aspects much more now to take forward the company. And from a consumer perspective, I think the government is absolutely determined to prevent a duopoly, and that's a good news.
I think one of the reasons why the stock has fallen drastically is because it does not give the balance sheet enough leeway to borrow more from the banks. This debt remains on the balance sheet, though this in the form of a moratorium, and the payment has to come from 2032 to 2041. But the expectation was that there will be a waiver of penalty and interest, as a result of which the debt in the balance sheet will come down, and they will be able to go to banks and financial institutions and borrow for their capex going forward. That is not going to happen now, because unless there is fresh strategic investment that comes into Vodafone and there is a headroom that opens up for bank borrowing. Sudeep?
Yeah, of course. I think what you say is right, and I think expectations of all kind were being built in. But considering everything, I would definitely feel that this is a positive development. Waiving a significant amount is extremely difficult from government's point of view as well, because there will be multiple questions raised. Other operators will also start clamoring for similar relief. And I think the government definitely wanted to prevent that. And that's the reason why this solution was worked out. From a balance sheet perspective, this incremental borrowing capacity, etc., doesn't get created. But I think it's a very good relief. 5 years, they don't have to bother about this amount. And after that, once the performance hopefully has improved, profitability has been restored in a big way, they will have to start paying, and they will pay this over a 10-year period. So, maybe market is overreacting, but I think it's a positive development, and I'm sure at some stage the market will start factoring in that. Of course, the operational issues which I mentioned earlier remains, and that needs to be addressed without any further delay.
Mr. Ranina, you seem to allude or suggest that absolutely no other concerns from a legal standpoint in as part of this entire Vodafone saga, where the government needed to likely waive or otherwise take care of the AGR dues. Give us a sense. So Supreme Court has thrown the ball in the government's court. the government has obviously put out this announcement, or rather, the cabinet has put out this announcement, and we will have a press conference at 3 p.m. What is it that you believe that the government will do in terms of caveats or in terms of protections for this large pot of AGR dues, which will now become due only in 2032? Your opinion?
No, my opinion is that there is no question of any caveat. Supreme Court has already said that the government of India is free to take any action as it deems fit. This is a final decision, and nobody can keep on challenging. In fact, the Supreme Court is very unhappy when people keep on just challenging for the sake of challenging and create more and more backlog for the Supreme Court. So I don't think the Supreme Court will now intervene. If anybody wants to now go again, they will be just thrown out at the initial stage itself. So personally, I don't see any legal issue. This is a government policy. The Supreme Court will never interfere in the government policy. Supreme Court is only deciding on issues of law. Government policy is something which is totally free. Supreme Court cannot intervene. That's under the Constitution of India. So government policy will continue as it has been announced today, and I don't see any legal issues at all.
The intent, Mr. Ranina, seems clear. The direction seems to be that the government wants a three-player industry. I think that is evident even to you, right?
Absolutely. And we have to protect that entire telecom ecosystem. We cannot allow duopoly to continue. This is against the Competition Act also, the Competition Law of India. So this the policy of the government will certainly be upheld by the Supreme Court if at all any challenge is made.
Perfect. Thank you so much, Mr. Ranina. That gives us a lot of clarity. Also joining us, Piyush Pandey, Senior VP, IT Lead Analyst at Centrum. Piyush, great having you. This is Harsh here. Give us a sense of what this does to some of your estimates, because this will certainly change your cash flow estimates significantly, at least over the next 3 to 4 years.
See, Vodafone Idea is able to generate cash EBITDA of roughly 10,000 crores. And as of now, it looks like it will be able to deploy for its capex for 4G and 5G program. So in a way, I would say this is a welcome measure. But I would say the relief is slightly less than what the street was expecting, because the total debt would remain at around 2 lakh crores. And Vodafone does need one additional strategic investor who is ready to infuse equity and take care of these ongoing expensive programs. But I would say, of course, this relief takes care of near-term survival issues because the industry needs 3+1 structure, and that is what we are.
Piyush, now that it's very clear that the debt on the balance sheet remains for Vodafone, and the borrowing ability is now very limited in that sense. There are only two options which are left with respect to Vodafone. One, either they go ahead and raise prices again in the market, and that would be a big challenge for them, because that they may end up losing more customers to other players. And the second is that they get another strategic investor who infuses equity to bring in some more liquidity for them.
I would say, as far as tariff hike is concerned, I think Bharti or Jio would have to take the initiative. So tariff hike, I believe, would come from either Bharti Airtel or Reliance Jio. So it makes more sense for Vodafone Idea to have one, to add one strategic investor, because now there is more clarity regarding AGR dues and the timeline by which they have to be paid. So one strategic investor who is ready to infuse a good amount of equity would be helpful, and that can take care of the ongoing capex program for Vodafone Idea.
Okay, so Piyush, in very simple terms, is this material enough to change Vodafone Idea's outlook going ahead, or is this just deferring the stress that lies ahead for the company?
I would say, of course, this relief takes care of survival for Vodafone Idea for the next 4 to 5 years, obviously. Obviously, this relief takes care that we would have 3+1 structure in the industry. But as long as the total debt remains on the books, so that remains overhang. And so, of course, the industry and the Vodafone needs for tariff hike and equity infusion. But as of now, the other two players like the Reliance Jio and Bharti Airtel are just too strong in the telecom ecosystem. So we have seen that both Bharti and Jio, they continue to gain market share at the expense of Vodafone Idea. So the industry, there has been a trend that industry is getting into sort of duopoly, and we would have a three player, but Vodafone would remain sort of a weaker player as of now.
And Piyush, give us a pulse. What was the street expecting versus the 87,000 crore that's already been received? I'm trying to understand what the delta is, because the reaction from the street doesn't seem positive at all to this.
Yeah, I think there was expectation that part of Asia dues would be waived off. There was expectation that part of Asia dues would be waived off, primarily that part related to the penalty and the interest part. And of course, a sort of moratorium was also expected. But now I think it looks like there has been no waiver of any Asia dues. So, yeah.
Okay. And Piyush, the fact that there has not been a waiver at all, how does that change the thesis or the risk reward at this point? Because the Vodafone stock from the lows this year, from 6 rupees a share, is currently sitting at near 11 rupees a share. So how should one look at that as well? Contextualize that for us along with whatever has played out today.
I would say the current share price, it factors in most of the positives from this today's announcement. I would say that it looks slightly expensive side for Idea if you look at this fundamental. So our thesis is that we continue to prefer Bharti in the telecom space. Right?
Okay. All right. Piyush, thank you so much for joining us. This has been, on this very critical day, it's been very, very insightful. So thanks for joining us. We'd like to thank all our other guests as well. Sudeep, of course, we spoke with Mr. Ranina and we let him go as well. So great perspective coming in from all of those guests. Kunal, on the stock chart, how's it looking now, Vodafone Idea?
Well, if you ask me, I would believe that this could actually be a good time for traders to start building up the stock, because today it's down 8-9% so far as compared to 10-10.5 odd levels. In case if the stock drops down to say sub 10 mark, I would actually believe that that could be a good point where traders could look at a contraband Vodafone Idea.
Thanks, Kunal. Actually, if you look at Vodafone, the expectation was 30 to 40,000 crores of reduction of debt because of the interest and penalty which was imposed on them. If that is not going to come in, then the debt comes into, they will be, it was a switching of that, reduce that debt and then go to banks, raise that capital for capex for the 5G foray. Now what will happen is that they will, while 18-19 AGR dues will be paid over a period of next 5 years, and this debt remains on the book, there's very limited cash flows which is coming in. So as the analyst was saying, they're getting 10,000 crores of EBITDA. Of that EBITDA, free cash flows after interest payment would be very little for them to do a capex kind of thing. So they will be dependent on more price hikes. So this decision of that is good for the telecom sector, because if Vodafone is going to raise prices, then you have Bharti and Jio may also raise prices, and that is good for Bharti, and that's the reason why we see Bharti going up today and Vodafone going down, because it basically gives an indication that there's no other way but to raise prices from this. And we asked the telecom minister Sindhya about whether they will look at price hikes. They said it's a free market, you can do it.
Well, it's a free market, but it's a three-player market. So it's competitive, but free. What we're going to do is slip into a very short break. On the other side, we'll continue coverage. Stay with us here on ET Now.
Back with closing trades right here at 18 Now, a 52-week high for Vodafone Idea, and from there it's actually cooled off or nosedived, I should say. It's beneficial for Bharti because it seems like Vodafone Idea has no choice but to up their rates, or tariffs rather, and once one incumbent would bell the cat, I guess others would only follow. And you've got Bharti, which is the one actually holding out in trade. But what about the rest of the market? Because there too, you're finally seeing that last mile pickup coming in as we wind down for the year. So 26,300 here on the Nifty futures, HPCL, JSW Steel, SAIL, BPCL. It's an unusual mix of movers out there. Nikhil Khandelwal is here on the show with us. Nikhil, hi, afternoon. OMCs and the move on them. Did you see that coming?
Hi, good afternoon. Can you hear me?
Yes, I can hear you.
Okay, excellent. No, so I think it's year end and in fact the last day of the year, and there is a lot of follow up buying on value stocks, and I think OMCs as a pack in general, we have been talking about a lot of value sitting within the pack, and it's basically a lot of that kind of action which is happening across HPCL, BPCL, IOC, etc. These companies are trading at close to their lowest multiples in the past couple of years, with actually the business going through some of the better phases. So definitely there's a lot of value in this entire pack. It's quite under-owned as well as far as institutional investors is concerned. So I think from a general NAV perspective, also a lot of follow-up buying is happening in some of these under-owned stocks.
Indeed. Kunal, you were quite bullish on OMCs, right, earlier today, and that move has played out quite nicely. HP, BP, both those stocks holding out very smartly. Kunal, unmute yourself.
Yeah, can you hear me now?
Yes.
Okay. So I had a buy call on OMCs. Today as well as in yesterday's trading session, because my expectation is that many of these stocks are now coming back into huge breakout modes. This has been a major turnaround sector as such, and specifically over the last 4-5 months. I think July, August was the period where you've seen the OMC stocks heading towards the first leg of a breakout. You've seen HPCL, BPCL heading towards their respective breakouts of the previous major highs. And post that, we've actually seen these stocks climbing up by, I think, a margin of 10% to 15% broadly. Even this time around, it looks like that these stocks are starting a new cycle on the upside. I would be very bullish on the entire space. And my sense is going into 2026, this could be one very strong pocket of PSUs, which one I think we should be looking to.
Okay. What about the PSU banking index, Kunal? Is that one also looking interesting?
Well, absolutely, yes. We were discussing Canara Bank, Bank of India, PNB, etc. in the last couple of days. It looks like that now the trade is getting shifted towards the other larger cap stocks. SBI has managed to come back, or rather make a very strong comeback, back again about that 975, 980 range. The move is also getting trickling into the other PSU banking names, the non-FNO ones, Bank of Maharashtra, for example. IOB which did very well yesterday as well. So I think many of these stocks are now looking quite attractive. The last 3 or 4 months, we've seen almost like a 20% kind of a jump broadly for many of the PSU banking names, and then followed was in the month of December a 10% to 8% correction for many of the PSU banking stocks. So it's a classical process where for a period of 3 months the stocks move up higher. There is a cool off, minor mean reversion for these stocks, and then a pickup of price action yet again. So I would sense this is a second leg of price uptrend for the PSU banking names. Would be very bullish on the stocks from the PSU banking arena, and with a time frame of 3 or 6 months, I would expect potentially another 10 to 15% returns into these names.
Okay, PSU banks all the way. They've had a great time all through this year, and it seems like next year as well is going to be turning profitable for them. Let's take a very quick break. We'll continue tracking markets on the other side.
Thanks for staying with us, viewers. Let's go across. Nikhil Khandelwal still with us, Chairman and Managing Director at Systematics Group. Nikhil, great having you. Let me first get a sense from you about Vodafone and everything that's playing out in the telecom space. This is it's big news, but there's no waiver. There's still some bit of clarity required with regard to the waiver. Do you believe that that's where the larger part of the expectation or the weight of expectation actually sits, which is the waiver, and which is why probably the street is a bit disappointed, 15% lower now on a Vodafone Idea?
No, you are absolutely right. The market was expecting much more from today's cabinet meeting. Definitely, waiver was something which was the first set of expectation from the market participants, and that has definitely not come. The numbers are quite staggering, as we all know. Close to 2 lakh crores of debt, 85,000 crores of AGR dues. So, I think from a news perspective, from a development perspective, it is still positive. It shows a clear intent that the government doesn't want a duopoly and they are supporting the larger cause. But I think from a short-term perspective, the market participants are clearly not enthused, given that the first expectation of the market was that there will be some form of a waiver which will come to Vodafone Idea. So yeah, I mean, short term the reaction may be so, but net it's a positive development for the sector and for the company in general. Is our view at this point of time.
And Nikhil, within the telecom pack, is Vodafone something that interests you, or do you believe that telecom as an entire space is something that you like, and within that, what is it that you like, that you prefer?
I think the telecom sector is best played through two large companies. One is Bharti Airtel, which clearly is the most, I think best placed in terms of market positioning, pricing, even the valuations, etc. I think it's in a very sweet spot. But the other play which we have been recommending as well as owning in some of our own portfolios of our company is Indus Towers. That is also a very strong play on the entire telecom theme, and in fact, from the Vodafone Idea as a pack, also a large part of their tower requirements are catered by Indus Tower. Any positive news in Vodafone Idea is actually a positive news for Indus Towers as well. So it gives you the best of both the worlds in terms of the Bharti Airtel growth is also built into Indus Towers, and also any revival which comes from Vodafone Ideas also can be played through Indus Towers. So these are the two best platforms to play the entire telecom theme, and we really believe that is a multi-decadal theme as far as India is concerned. So definitely one of these two stocks should be there in the portfolios to participate in the sector.
Do you believe valuations, at least for an Airtel, seem reasonable as well?
Absolutely. Yeah.
Got it. Nikhil, how are you playing metals at this point? Because that's the other sector which is in focus today in particular, especially given the safeguard duty which the government has imposed on steel imports, which helps obviously the domestic industry, and it's been the appeal of the domestic industry for a while. It was in the pipeline, wasn't coming through. A nice little New Year gift coming through for that. How would you play metals?
Yeah, I think the non-ferrous metal space has been on a tear, which we have seen, across copper, aluminium, and of course the precious metals as well, the gold and silver. The one piece of the puzzle, which is obviously the most volume-driven category of steel, was something which was still facing a lot of pricing pressure, largely driven by import from outside of our country. And I think the government has come forward and addressed through the import duty move today morning. We believe that in general the metals in pack in general is a good theme to play. It is, as we all understand, is a good theme on India's housing as well as India's infrastructure development. If well protected by the import, the risk of the import prices, etc., and the dumping of a lot of imported products, the sector can really thrive. Majority of the Indian metal manufacturers, whether ferrous or non-ferrous, are increasingly putting a lot of value-added capacities as well. So a mix of all that, the entire pack, whether ferrous, a metal platform like Tata Steel or a non-ferrous metal platform like Vedanta, both are quite attractive, and so are the entire set of metal value chain producers. So it's an attractive area. We are quite overweight on the entire sector in general, and non-ferrous was our more preferred pick. But with the recent move on by the government on the import duty on the ferrous metal side as well, there are a few large companies like Tata Steel which also can be participated for I mean, they also have a significant value sitting within the company, and I think this move provides a good momentum opportunity in these companies.
Sure. So, what is that one sector that you're betting big on for outperformance in 2026, where you think there is scope of a profit pool as well, which is getting created? Because before we know it, soon we're going to be stepping into earnings too.
Yeah. No, so I think one which you spoke in the show sometime back is PSUs. I think that is something which we have been quite positive for the last 6-7 months. But I think that has been spoken of. I think beyond that, we are quite positive and enthused by the entire pharmaceutical, the entire pack of pharmaceutical industry. We are seeing the data as it plays out, and we are seeing that there's a very clear trend of significant volume growth in amongst the leading players in pharmaceutical industry from Indian market. We are also seeing that these companies are beginning to get a good share of growth from their emerging market portfolio, and while continuing to grow their value-added portfolio across the world, including from US and Europe, and the pharmaceutical industry in general is also getting significantly consolidated with let's say the top 10 to 15 players actually gaining more market within the domestic space. So, given this entire trend of volume growth in India and emerging markets and a good balance of earnings and volume from global markets, we are quite excited about the sector in general. But in general, in particular, we are Cipla and Sun Pharma are the two companies which we are extremely overweight on, and we believe that these two would be stocks, must-have stocks in the portfolio from the next year perspective. So this sector in general, largely domestic pharma companies, but within that, Cipla and Sun Pharma are our two best picks.
Okay, Nikhil, great to have you today on the show, and here's wishing you a very happy new year from all of us.
Thank you. Happy New Year.
Okay, let's take a very quick break on that note. But, since Vodafone is the hot topic right now and is in the limelight, let's revisit an exclusive chat that we had with the Telecom Minister, Jyotiraditya Scindia, on the future of telecom and if the industry will resort to further price hikes. In fact, this conversation as latest as just a few days back, mid-December.
Tremendous possibilities for Vodafone going forward. They also service close to about 20 crore customers, which is a very large size of the market. And therefore, we do believe that there is a tremendous amount of potential going forward for Vodafone. Having said that, they do need to incur a fair degree of capex to be able to sustain their network. And that is what is on the anvil based on the FPO proceeds that they have raised. This is a deregulated sector. Tariffs are under forbearance, right? And that is not my responsibility to manage the corporate strategy of different telcos. Every telco will have its own individual strategy, and that's for them to decide. The only concern that I have is at the end of the day, my customer must get value for his or her money. And as I mentioned to you, we are the lowest tariff today in the world.
Welcome back, and you're watching Closing Trades here on ET Now, and we are joined by Nagaraj Shetty, Senior Technical Research Analyst at HDFC Securities. Nagaraj, great having you. What do you make of the move on the market today? It's been such a strong move, and I understand that some part of the move is because or due to the fact that we've seen Reliance move well, contributing nearly 50 points positive to the Nifty. But it's also the breadth, right? So there's plenty of support.
Yes, hi. Good afternoon. Rightly said, market was moving in a range-bound action. Some choppy movement was there. Market has been repeatedly tested a strong hurdle around 26,200, 300 levels. What was the important that on the larger term charts, the market was finding supports on the every higher rise, higher bottoms. Higher bottoms were frequently formed. That itself indicated that the market is creating some base for the sailing towards the resistance. And I'm expecting from here onwards, market could retest the important hurdle of around 26,300 levels, and we could see some consolidation at the higher level, and finally we could see Nifty breaking above 26,200, 300 levels decisively over the near in the next at least 1 to 2 weeks.
Right, interesting. So, Nagraj, what are the sectors or stocks that you're betting on? Anything that comes to your mind which looks like it's going to have a more sustainable move in the new year?
Yeah, I have two stocks. First one is from a shipping side. GE Shipping. Chartically, this stock has been in a larger consolidation pattern. Long-term chart remains intact with a strong uptrend. High tops, higher bottoms on the chart is indicating the strength in the upside momentum. Currently placed at the edge of upside breakout of downsloping trend line somewhere around 113035 levels. I'm expecting more upside for the short term. One can look to buy at this point of time, currently trading around 113435. The initial upside target would be around 1170, 1180 levels. One can place a stop loss at 1100. Second one is GMR Airport. GMR Airport is in a strong uptrend. Recently showed some kind of a consolidation. Triangle type of pattern has been found on the daily chart, and the stock price is currently placed at the breakout of a converging triangle pattern somewhere around 105 levels. Currently trading around 10420. One can look to buy at this point of time. Initial upside target would be around 109. One can place a stop loss at 100.
Joining us also is Sunil Subramaniam, founder and CEO at Sense and Simplicity. Sunil, great having you. Sunil, give us a sense, one sector that's to some extent underperformed is the Nifty IT index, and it's obviously well off the highs. Can it in 2026 be that sector which stands out, the contra play?
Absolutely. And I think if you take the 1 year return versus the 3 month return, you can already see 1 year it's been down double digit, but 3 months it's been up double digit. So clearly the tide is changing for IT. And I expect this quarter results to be also supported by the 7% depreciation of the rupee. So the rupee earnings of IT companies should be very healthy in this Q1. And you're also seeing the signals of the IT players either investing heavily in AI or buying AI companies. And they're also retrenching their middle level staff who are not AI ready, and fresh recruitment is happening for AI ready. So I think AI consulting is going to be the big story that IT players will enter into the next year. And with the Fed rate cut in the pipeline, I expect that monetary flow from an FIF perspective, they would tend to prefer IT as a sector because they get a hedge against the currency. Because if the rupee weakens, which is damaging generally for FIS, IT should compensate. So I think, yes, IT could be the dark horse for next year in terms of bouncing back from what has been not a very great year in 2025.
Surely, but the quarter has been, Kunal, right? And you were one of the first to identify the oncoming move on IT. How sustainable is it looking as we step into the next year?
Yeah, this looks sustainable for the IT stocks at large. But then I think we have to be ready for one more round of volatility for these IT names. Because the mixture of the IT stocks has changed, and that I believe could be a concern because what we may see over the next few weeks It could initially be maybe one more round of volatility, one more round of a price correction for few odd IT names. But then I believe that the later part of the course for these IT stocks should be on the higher side, where I would expect that many of these IT names would break past about their highs, which they created just about a few weeks back. And in the last I think few weeks, there have been names like Persistent, Coforge, etc., which have fallen down by say 8 to 10% broadly from their previous swing highs. So breaking out of that on the higher side could be something which will take a bit of time, but I believe eventually these stocks may want to go back into those breakout mode. So you have to be very selective. You also have to be ready for one more round of volatility for these IT names. And I think if traders could look at timing this sector pretty well, then I think there could be a lot many potential large cap names and potential stocks which can do very well for themselves in the calendar year 2026.
And Sunil, if I were to ask you, uh, sector pocket which could outperform. I know you spoke about IT, but any others in your bag which you are looking forward to for 2026 to be a possible outperformer?
Yeah, I think reality time will come next year, because the GST impact has not been felt at all in terms of the stocks of that sector. And that's very logical, because what happened, you've seen sales drop in number of units, but values have actually risen, right? So high-end properties are clearly the ones selling. And that's partly because the richer HNIs are obviously looking at property as a good investment. But for the next year, I think that with all the GST cuts and the rate cuts coming through, right, the real estate developers, they have been lagging behind in launching affordable home projects so far, because the demand hasn't been there. So this year that will get redressed, right? They will now go look for parcels of land just in the outskirts of the cities, put them into smaller plots and smaller houses for affordable housing. And with the rate cuts and the cuts on GST products on the building materials also, you will see that sector. Second thing that I'm positive is because of the whole Trump tariff H1B situation, which has led to the GCC. I think we'll get a reinforced boom in India, and GCC again is a corporate real estate play, right? That's the second aspect. The third aspect for the real estate I would support is the fact that funding has just got easier for them with REITs getting equity status. So a lot more mutual funds will allocate a lot more money to REITs in their portfolio. You could see a dedicated REIT thematic fund launched by some AMC during the year, which will be an equity taxation fund, but investing in REITs which have a stable income. So I think that with that, the funding options for the developers increases dramatically. So overall, I think that real estate is set. It's been one of the worst performance in 2025, but again, as a contra play through the year, I expect reality to be an outperformer because of the reasons that I just outlined.
Here's betting big on realty for the year ahead. On that note, let's take a very quick break. When we come back, we'll track the last half an hour of trade for this calendar year.
All right, so among the movers, and let's pull some of these stocks out. Wockhardt up 5%. They've got approval from the EU with regard to Zenich. Apollo Micro 4% higher. Shakti Pumps nearly 4% higher on the back of order wins, both Apollo as well as Shakti Pumps. You're seeing a move on Dynacon Systems, just a 1,200 crore market cap company getting a 200 to 300 crore order. RK Forgings is up 4%, Wrights is up 3.5%, Heritage Foods is up 2%. So you've got a good texture in terms of the move in the market. Those are just some of the bigger movers on the back of news. Privy, on the other hand, down 12%. There is a promoter stake sale. 6.3% was disclosed. Of course, we'll wait and watch once the final numbers come as to how much stake has actually been sold. But 12% lower on a Privy. Swiggy is also down 1.2 odd percent. There's expected, or rather likely to be, a strike today with regard to the gig workers, and you will see some pressure on Swiggy. It's down nearly 2% as we speak. Now, the other buzzers are graphite manufacturers. HEG and graphite they're soaring away in trade, though, on the back of optimism surrounding European Union's Carbon Border Adjustment Mechanism, which is CBAM. Ashesha here with more on that one.
Well, yes, so there's a lot of optimism around this mechanism, which is expected to come into effect tomorrow, that is the 1st of January in Europe, because of which both these graphite electrode manufacturers are buzzing in trade. In fact, not just today, they've been buzzing for the last several trading sessions. If you look at Graphite India and HEG, both of them gaining anywhere between 7 to 9% today, and they are up 25 to 30% in the last 1 month. That's the kind of move that we've seen for both of these graphite manufacturers. As I mentioned, it is on the back of that mechanism. Let's discuss a little bit more about the mechanism. Remember, it is European Union's Carbon Border Adjustment Mechanism, or CBAM, which is carbon duties on export of steel from countries globally into Europe, which means they are trying to incentivize cleaner and more greener steel manufacturing, because of which these stocks are buzzing in trade, and that is because these companies manufacture electric arc furnace, which is used for steel manufacturing and environment friendly steel manufacturing, because of which both of these stocks are gaining in trade today. Analysts believe that there will be no direct benefit. However, steel that is manufactured using environment-friendly methods and electric arc furnace is slightly better off as compared to the new mechanism, which is likely to come into effect. So this is the narrative because of which both these counters are buzzing, not only today, but as I mentioned, both these stocks have gained nearly 25 to 30% over the last 1 month on the back of this.
The graphite rally that's holding out very well today. A good spot, in fact, on the stock, 5.25% higher as we speak right now. Nagaraj, what's the reading on the charts? A good breakout? How sustainable is it looking?
Yeah, looks like a strong breakout. Recently, we have seen sharp momentum from 530 to almost 640, 100 rupees higher. But chartically, though placed at the higher levels, there is no indication of any tiredness at the highs. I'm expecting a decisive breakout to come sooner from around the 645, 650 levels. And once it breaks above this hurdle, the overall chart pattern looks like with the volume breakout. And I'm expecting the next hurdles to be watched on the resistance on the upper side would be around 700.
Okay, Wockhardt is the other one in focus. We spoke about it briefly. The European Medicines Agency, which is the EMA, has fast-tracked the antibiotic WCK5222, which is Zenich, and as a result of that, the stock is flying in trade, 5% higher. Sunil, how do you view this?
I'd rather not comment on a stock-specific answer.
Okay, sure. Kunal, on charts, how's it looking?
Yeah, I think it's looking attractive. Wockhardt Pharma finally has managed to find its speed back again. The stock heading towards a breakout of the 1400 plus levels. There was a minor blip or a correction, I think, in the last 2-3 weeks for the stock price, where it cooled off, sub that 1400 levels, 1350, 1375 thereabouts. But I think from there, the stock has managed to pick up good pace. So looks like a stock which could potentially now, the recovery could now potentially sustain for Wockhardt Pharma. The only caveat over here is that it's a very high beta stock. We've seen multiple times that the stock has capacity to swing even 10-15% in one side of a trend. So, for traders who are looking to buy, the sizing of the positions in these kind of trades have to be on the very apt side.
That's the take coming in right now on pharma. But Sunil, while the story last year was all about CDMO, it began with that at least. And then, of course, eventually it was benefit GLP-1. Where do you think the pharma story is headed next in terms of what the market would like or pick up on as a trend?
No, I think GLP-1 is here to stay for next year too. Given that we are the obesity capital of the world, I think even domestic demand for GLP-1 molecules will be huge. And I think that's a very transformative story. So I don't think that we need to look much beyond that in terms of the growth story from a pure pharma perspective.
Okay. But marquee day today, outside of it being the last day as well as trading day of 2025, it's also the end of an era, especially an era of global investing, of value investing. Warren Buffett, the Oracle of Omaha, retires as the CEO of Berkshire Hathaway at 95 years of age, closing a 6-decade run that has reshaped the investing landscape. Greg Abel takes charge as Berkshire sits on record levels of cash and shifting priorities. From Coca-Cola to Apple to Geico, Buffett has beaten markets across cycles, even though recent years shows a tad bit of underperformance, even if I can call it that, but bases his lofty standards. Snehi gets us a glimpse of that journey.
Well, yes, today all the global markets bid adieu to Warren Buffett, who's stepping down as the CEO of Berkshire Hathaway after a very illustrious 6-decade career at the helm of the firm. Greg Abel will be taking over amid the backdrop of cash reserves, which are at a record high for Berkshire right now, and shifting investment priorities. So passing off the baton is going to be taking place. Let's rewind a little bit and talk about Warren Buffett's investing journey. Much before Berkshire Hathaway even came into the picture, when he was just 11 years old, he bought his first group of equity shares. In 1956, when he was 26 years old, Buffett founded Buffett Partnership Limited. In 1964, he bought some stake in American Express. In 1965, bought stake in Walt Disney. Then in 1965 comes Berkshire Hathaway. He acquired Berkshire Hathaway and transformed it into a holding company at the age of 35. 1970 became the chairman and majority shareholder of Berkshire Hathaway, and in 1978, the decade-long partnership, in fact, a partnership that has lasted the test of time, Charlie Munger and Warren Buffett, they were introduced to each other, and Charlie Munger joined as vice chairman for Berkshire Hathaway. In 1970s and 80s, Berkshire Hathaway invested in Sea Candies and GEICO Insurance. In 1980s and 1990s, they invested in Coca-Cola, McDonald's, Wells Fargo and Dairy Queen. So these are some of the marquee investments made by Berkshire Hathaway. In 1996, he took full control of GEICO Investments, and in 2010, he started investing in railroads like Burlington Northern, and then came the investment in Heinz, which he publicly regrets, and IBM. Then in 2016, he started accumulating shares of Apple, although he has started to pare some stake in the recent past, but Apple still continues to be the top holding in his portfolio. Let's now shift focus and talk about how his investments have performed. Berkshire's return compared to the S&P 500, Berkshire has given a 55,000 times return from 1965 to 2024. That's a 20% CAGR, vastly outperforming the S&P 500 with a 10% CAGR return in the same time period. If you talk about some of the moves in the last 20 years, Berkshire has outperformed the S&P 500 by 300%. In the last 10 years, Berkshire's outperformance has been 41% compared to the S&P 500. But yes, in the last 3 years, 12 months and 2025 year to date, which is this calendar year, Berkshire Hathaway has underperformed the S&P's return. Now, if you take a look at Berkshire Hathaway's cash pile, they sit at a record high right now of $381 billion. This, of course, on the back of stake sale that has gradually happened in Apple. And this cash pile for Berkshire Hathaway has consistently been going up since 2023. Now, let's talk about some of the famous quotes from Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget rule number 1. So that is one of the great investment quotes from him. And he also, in his last shareholders, the shareholders letter, the key takeaways over here are: decide what you would like your obituary to say, and then live a life to deserve it. So those are some wise words coming over there. In the last shareholders letter, he credited success to luck, timing and birthplace largely. He fondly remembered Munger and Omaha business partners as well, and was grateful for the journey that he has seen so far, reinforced long-term investing, patience and business understanding principles. Lastly, let's focus and talk about Warren Buffett's publicly recognized mistakes and the big blunders that he said. The first of them is the most ironic one, wherein he says buying Berkshire Hathaway itself was the dumbest stock that he has ever bought. So that is something he has spoken about. Then came Dexter Shoe Company. Then he also said that missing Amazon and Google, that rally was an error of omission on his end. And lastly, overpaying for the Kraft and Heinz demerger is something that he accepts that is one of his biggest mistakes. But that's the spotlight on the journey that the Oracle of Omaha has seen in a 6-decade-long illustrious career.
Well, truly a legend in terms of investing, but more than that, he's taught multiple generations of investors the method of his investing, which is far harder to do than just invest, right? So it's a bit of both, and that's why he really stands out among the crowd, outside of the fact that he's one of the greatest of all time, right? And one of the...
He is the GOAT.
Yes, he is the GOAT. So yes, but we bid him a goodbye, especially his on the investing side of things. And yes, we will miss him with all of his wisdom with regard to the meetings that they host in Omaha. And I'm pretty sure that he's not going to be hosting them anymore, and it will be Greg Abel who will be hosting them going forward. So I'm sure that the entire investor community will miss him with regard to at least that.
Oh, yeah, absolutely. The presence, and over the years that one has actually seen those AGMs and the kind of wisdom that it pours,
yes,
and it sorts you out in terms of, you know, your investing belief for the entire year, that of course is going to be missed. But let's talk about India markets, and let me take it across to Merrill. The European Medicine Agency grants accelerated assessment now to try and cheer, and that's why you're seeing the move today on Walk Hard. What's the reason behind that exactly? Merrill is here with that explanation.
It's an interesting new development on Walk Hard's new drug application for Zenic, and the stock has risen up 5% on the back of this. So let's take a look at this news. European regulators have cleared Zenic for accelerated assessment, signaling a potential faster entry into the EU markets. Now, Zenic is a novel proprietary antibiotic. It's got the potential to address an unmet medical need for severe, life-threatening drug-resistant infections. Now, this is a monumental point for the company and the broader Indian pharma industry as well, making it the first time in history that an NDA for a new chemical entity from India has received pan-European marketing authorization. Earlier this month, Walk Hard had received US FDA approval for the same drug, and the market had took this news quite well. We saw the stock rally 19% in the same trading day, and the same has happened again with the stock up almost 5% in today's trade.
Okay, thank you so much for that, Merrill. Walk Hard, of course, in focus. Nagaraj, the other one that's in focus today is an RK Forgings. Stock is up, perked up 3%. One of the pegs for that likely is that Morgan Stanley PTE has picked up a stake in RK Forgings. Stock is up 3.7% odd. Let's pull that one up. What's the view with regard to charts, Nagaraj, on this one?
Yeah, recently what we can expect is for sustainable upside bounce from here onwards. So we have seen some sharp decline recently and immediate pullback from the lower levels, from the lows of around 475, 480, and the stock is showing some consolidation breakout at this point of time. Overall chart development is indicating the formation of important bottom reversal for the stock price around 475, 480 levels. From here onwards, I'm expecting a sharp breakout from here onwards, and the next overhead resistance to be watched around 545 to 550 in the next couple of weeks.
Raj, we'll let you go on that note. So thank you so much for coming in and wishing you a very, very happy 2026. Of course, we'll see you on the other side of this new year. So see you. Kunal, though, another big mover is an Apollo Micro, 4% higher. And some of the defense counters doing fairly well in trade today, right, Kunal? Any of them on your radar for a quick BTST or any of them for a quick trade even within the medium term, maybe over the next 2-3 weeks?
Yeah, I think I'll still go with Bharat Dynamics as well as potentially Bharat Electronics. I think that's the two names which I'll be bullish on even from current levels. I think both of these charts have looked a little bit more stable as compared to the other peers from the defense pack. Recently also I think we saw Bharat Electronics moving towards 390 odd mark. Today it's moved back towards 400 levels. So that's a stock BEL which I'll be bullish on from current zone, and my expectation is that potentially in this leg of price uptrend, the stock may come back towards 410 to 420 mark as a near-term trade. So BEL is something which I'll be bullish on from current levels.
Okay, that's the word coming in right now on where there are opportunities within cap goods. Today, of course, it's really been all about steel. It's been about OMCs. But Kunal, how much would you read into today's move? The fact that we've made it back to almost that 26,300 mark on the Nifty futures. But today's move is also coming on the back of low volumes, I guess.
Yeah, it could be low volumes, Aisha, but then today's move is also backed by solid large cap names. Discussing this at the start, that names like Reliance Industries making a thumping comeback. You've seen, the banking names. Kotak Bank, for example, has come back towards its multi-week high. there are so many metal stocks which have done reasonably well for themselves. And the move has been spread across the board. The advanced declines also, I think, throughout the start, we were discussing that it's almost 2:1 in the beginning of the market open. It's almost grown into 3:1 in terms of the market breadth. So that tells you that it's been an overall buying session across the mid, small, and the tier two large cap names. That I believe could be a strong positive takeaway. The only thing is that the markets in the last many weeks also had seen these kind of up moves, but there was no follow through up move. So what matters is if in the next 1 or 2 days, closing of this week, if we see even a minor follow through, say a 50 point or a 100 point further up move for the indices, that will set the course for the index in terms of a potential breakout in the near term.
Okay. That's that right now on a couple of sectors. But just looking at the losing end of the market as well, while Indus Tower Shore has fallen about 1.25%, there's RVNL, which is seeing a little bit of a decline, 2% lower. Policy Bazaar, Hindustan Zinc is seeing some profit taking. And Idea, of course, is knocked off over 11% as we speak right now. But Sunil, just wanted your sense. I mean, even as we speak, the cabinet, I can see, has approved a lot of national highway capex. What, to your mind, is going to be the theme when it comes to infra in the year ahead? Would it largely be ports? Would it be defense manufacturing, railways, or back to roads?
No, I think that this time the government will slightly shift focus to enabling private sector capex. And this could be through routes, a slew of public-private partnerships to take forward. And that could be in any of these spaces that you mentioned where the government PSUs have land banks and everything. So that's one. And second, I think a strong push to the PLI scheme in terms of adding new things or tweaking it. So I think the focus this time is going to be to enable the private sector to participate in the capex story. And the government's efforts would still be to maintain a stable capex year on year, but rather divert money towards the consumption and putting more money in the hands of the middle class. So I think that probably I would say that the capex thrust would entirely be about enabling the private sector to really rejoin the capex cycle, which has been promised for some time now, but hasn't really done in a big way.
Kunal, your number one sector for 2026?
Yeah, I think difficult to call in, but I think if I have to take a bet over here, I would look at either the PSU banking names, which could probably take the baton forward from where they left off after this last 2-3 months of price uptrend, or the other could be a surprise in terms of the media sector, where the media sector has been a huge underperformer. And you look at the YTD charts, you look at the last 2-3 years of chart patterns for the media index, and it's been on the extremely negative side. So I think going forward in 2026, I would probably go for a contra buy into the Nifty Media Index. That could be a bet which traders could look out for.
Quite interesting. Sunil, quite curious to know your views on the media space.
Well, I agree with Kunal there. That is one of the biggest contra bets to take because I don't see a real logical reason for its underperformance in 2025. And something which beats logic, I think, should set right next year from that perspective. And Aisha, you all are better and aware, right? Media is becoming a greater and more important part of our life. And the digital media aspect, I think, is been a roaring success. So I'm bullish on the media, but I said the market is the god, and this year it hasn't treated media well. So one hopes that next year it will do that.
Okay. All right. What's the take with regard to pharma, Kunal? And within the pharma basket, is there something that you're liking?
So there are a few names which have started to look attractive. So if you ask about the overall basket in terms of the pharma pack, nothing much happening, frankly, because the pharma index goes into that very shallow breakout mode. There is no major push in terms of volumes, momentum, participation with respect to days when the markets are doing well. But then there are few stocks within the pharma pack which have started to look very attractive. Lupin, for example, I think the stock trading at 2,100 levels thereabouts. I think it's extremely well poised for a potential major up move going into 2026. My expectation is that potentially the stock can even head towards 2,350 to 2,500 kind of a zone in the next calendar year. You might look at a strong up move which could come back into the likes of Biocon, the stock which I think is trading at sub 400 levels right now. There has been a very big reprieve for the stock in the last 2 months or so, where it's recovered from 300, 320 to now almost the sub 400 levels. That's another name which I would be bullish on. So very few select pharma names as of now which are coming back into a strong breakout mode. But hopefully somewhere down the line in 2026, you might have many of the other pharma stocks trying to make a comeback.
Okay. What about CV, Sunil? There's been chatter that the CV cycle has picked up in a very strong fashion post the 22nd of September, post the GST rate cuts. How would you play that, if at all it has, if you have an opinion there?
Yes, I'm bullish. I think that they are the start of an upcycle, and the reason for this is not just the GST cut related logistic movement. It's also the e-commerce related, where the delivery of last mile deliveries are a big boost for the logistic part, and then the private capex pickup, which I expect. See, one of the things which I'm fairly certain is that the capacity utilization in the country is going to have gone up because of the GST, because the top lines, the auto sales you've already seen. In the summer, you'll see the cooling related durable sales. And I have said real estate also, I pointed out earlier. So to me, the top line growth means that capacity utilization should be crossing 80% in the coming year. And when private capex signals, then there's heavy movement of steel, coal, all of those things also, where the CVs are the key play. So across the board, from HCVs to MHCVs to LCVs, I think that the start of a new 3 to 5 year cycle in terms of the CVs has started in a small way and will play out in a bigger way through the year.
That's quite interesting about where the CV cycle is going to head. Just looking at some of the other buzzers today, while of course steel is that big trade, look at an ONGC that's also holding out 2.25%. Titan is seeing an uptick of about almost 2% or so. Axis Bank is looking smart. Shriram Finance, of course, has been quite the key story. And then Reliance, like we were flagging off earlier, it's almost notching 1.7% up in the green as we speak right now. Sunil, curious to get your views on Titan now with their foray into lab-grown diamonds, which was earlier to be the big concern with their first showroom opening here in Mumbai as of yesterday. Wanted to understand what your reading is on Titan now.
Well, again, I would hesitate to talk stock specific, but I think lab-grown diamond is a huge growth space, given the rise in the prices of natural diamonds. And if you are a movie follower, you'll know how Vivek Oberoi, the film star, has made a huge killing in lab-grown diamonds. So I think it's a huge market which has not been fully tapped in India. And given the rise of prices in gold, silver, and diamonds itself, I think this is a good sweet spot for the upper middle class to start acquiring these kind of fashion jewelry. So I'm very bullish on lab-grown diamonds as a space. But specifically, I like the company. I'm saying I think they've been a bit late to the party in this. So one hopes that they do pick it up in speed in the coming day.
Okay, Zydus Wellness is the other one. The stock's up 12%. Motilal Oswal initiated coverage, positive on the counter. Kunal, on charts, how is this one looking?
Yeah, it's looking attractive, Harsh. But the moot point over here is that the stock has trimmed off gains from its intraday highs. I think the intraday high for the stock was around the 480 kind of a mark, and from there we've cooled off back again to that 450 levels. So it tells you that this was more of a trading rally or a trading jump into the stock price, and you might not see a follow through up move in the same kind of a manner for the stock. And this 480 level could act as a hurdle for the stock in the near term. So no major bullish trades over here, but I think 480 largely could be a short term resistance for Zydus Wellness.
Sunil, do you at all track Zydus Wellness? Is this something that would interest you?
No, I don't track.
Okay. Sunil, within the financials, what do you like?
Well, I agree with Kunal that PSU banks, despite them being the best performing sector of last year, do carry tailwind in terms of both a reforms package supporting it, a possible merger of 2 or 3 big PSUs banks likely being around the budget and the private cycle of private capex cycle, I think we'll need financing for SMEs and MSMEs. And I think PSU banks are at the forefront with their decadal experience in lending to that sector. So still they would be my top pick. The second pick within the BFSI space would be capital market intermediaries, because I think those are the kind of, you're going to see a lot more listings come through in terms of both the asset management companies and the insurance side. So I would say capital market related stocks are my second pick within the BFSI pack.
Okay, that's that on which way the year ahead is going to head and what are the top sectoral picks. But Sunil, great to have you on the show, and here's wishing you a happy new year from all of us.
Happy New Year to all of you too, and to your viewers.
Thank you. Kunal, we'll see you again tomorrow morning, but nonetheless, happy new year.
Happy New Year to you too, Aisha, to all the viewers of ET Now.
Thank you so much. Okay, as we wind down for the year, we've definitely not done bad, given that it's the last trading session and we finally pulled up our socks, snapped out of that range that we've been stuck in for so long. And we made it to that 26,300 odd level, at least on the Nifty futures. But how's the day been? More importantly, how the year gone by has been. Let me hand it over to Snehi for a recap.
Well, absolutely. First, let's start by talking about how today's trading session has been. And like Aisha mentioned, we've pulled up our socks on the last trading day of the calendar year 2025, 26,130 thereabouts, so comfortably above the 26,000. And in fact, even the 26,100 mark on the Nifty, 0.7% higher. Similar move coming in on Sensex. You have Nifty Bank also that's sharing in this joy, 0.7% uptick over there as well. It's names like Axis Bank, HDFC Bank, some private sector banking names that have done well. But the real show of support from the Nifty group of companies is coming from JSW Steel, ONGC, Tata Steel, Kotak Mahindra Bank and SBI Life. So of course it's the steel stocks, financials, autos, all of them have done pretty well today. On the flip side, the IT sector has been the only sector in the red today. A continued pressure on that sector with names like TCS, Tech Mahindra, Infosys, all of them are showing cuts of between 0.5% and 1.5%. So some weakness on the Nifty IT front. The broad end of the market has outperformed the benchmarks today. Very good show of strength coming in from the broader indexes, and the advanced decline ratio also quite skewed in the favor of the advances, and that is what has led to a lot of positivity and a 1% uptick on both of the broader market indices. Talking about sectors, while IT was under pressure, it was names like energy, metal, PSU banks, followed by auto, realty, FMCG, pharma and Nifty Bank that did very well in today's trading session. So if you talk about some individual gainers and losers from the Nifty 500 group of stocks, it's Graphite India, MRPL, HPCL, HFCL, Deepak Fertilizers, all of them have seen gains between 6 to 9%. And of course, the big story of the day, we have to talk about the tumble that we've seen on Vodafone, a 15% cut after their AGR dues were given a 5-year moratorium, but it's not waived off to the extent that the street was expecting it to be. Slight recovery on the stock from the day's low, but nonetheless, about 11 to 12% cut on Vodafone Idea. It's names like Naveen Flooring, Aditya Birla Sun Life, Hindustan Copper, City Union Bank, Radico Khaitan, Hindustan Zinc that have also made it to the list of the top of Nifty 500 losers. So basically, in a nutshell, that is how we are summing up. 0.7% higher on the Nifty, ending this year, calendar year, at a mark around 26,100, slightly above that. But now let's throw the spotlight to what the calendar year 2025 roundup has been. It's been a good year for us so far, given the kind of volatility that the markets have seen. Let's talk about the move in the Nifty. 9.25% higher. Nifty mid cap also has managed to close in the green. It's Nifty small cap that's been under continuous pressure from the beginning of the year, and that's the move over there. In terms of commodities versus the Nifty, brilliant rally in silver. It's been the year of the white metal, followed by good move in gold. Nifty there at 9.25%. It's actually the cryptocurrency space and the Bitcoin space that has seen a little bit of a drawback. In terms of Nifty gainers and losers, it's names like Shriram Finance, Maruti Suzuki, Eicher, Hindalco, Bajaj Finance that make it to the list of top Nifty gainers. On the flip side, immense pressure on Tata Motors PV, a 50% cut over there, followed by Trent and TCS. All three Tata group of companies are the top Nifty 50 losers, followed by ITC and HCL Tech. From the broader end of the market, the mid-cap basket, L&T Finance, what a wealth compounder it has been in this year, followed by AB Capital, AU Small Finance Bank, Muthoot Finance and Ashok Leyland. On the flip side, top Nifty mid-cap losers included names like OFSS, Kalyan, Premier Energies, Irera, Canara as well as Dixon Tech. Now talking about the real losing index, and the big cuts were seen on the small cap space. Still, you had names like Hindustan Copper that were up 115% on the back of the rally that we've seen in silver prices, followed by Naveen Fluorine, Laurus Labs, MCX and Manappuram Finance. But on the flip side, the real weakness came on the small cap index from deep cuts on Tejas Networks, Ola Electric, Brainbees, which is First Cry, Whirlpool of India and Nugent Software. All of them have seen cuts of between 50 and 60%, so not looking good over there. Sectorally, it was the year of the PSU banks, shown very brightly, 29% higher over there, followed by metal, autos, bank, energy, FMCG. You have FMCG that's ended with a slight cut, pharma, IT and realty all ending in the negative, with Nifty Realty being the top sectoral loser, a 17% cut on that index. While we're talking about gainers and losers, from the PSU banking counters, it's Canara Bank, IOB and some of these other stocks that have done well. On the flip side, the pressure that was built on Nifty Realty was because of names like Anantraj, Brigade, Godrej Properties, Oberoi Realty and Lodha Developers. So that's a list of all the names that have caused pressure to the Nifty Realty index. Now let's talk about the FII and DII buying and selling activity. It's been a record here and an exodus of FII selling to the tune of 3 lakh crores. But domestic institutions kept the momentum going in the market with a purchase of about 7.8 lakh crores in the year gone by. Lastly, let's throw the spotlight on currencies. It's been a very volatile year for our rupee back home. Russia, South Africa, the euro, you have Brazilian currency, pound, yen, all of them have done well. Yen has ended absolutely flat, but it's the rupee back home that's seen a cut of about 4.5%. So yes, lots to look forward to in 2026 in terms of market recovery, what the earnings are going to look like and whether or not rupee finds its footing back. But well, yes, this is how in a nutshell we've ended the year. Nifty 9.25% higher.